Hello, I'm David Wright. I've been a mortgage lender for 20 years and I've helped people buy, sell, and finance homes that entire period. So I'm making this video to introduce all the different tips and things that you need to do in the process of getting a home loan to make the whole experience better, easier, and smoother for you. The home buying process is an exciting time and it's filled with lots of different highs and lows. This video is designed to show you what goes on through the pre-approval process of getting a mortgage to the full loan approval process of getting a mortgage. And this is done to ensure that your loan has been set up the perfect way so that while you're shopping for a home and you find the perfect home, you don't have to worry about the home loan going through. It's already been done correctly to make sure you have a great outcome. Before we dive into the whole process, let's look at a couple of the upfront costs that you can expect to have when you're buying a home and through the whole process. So, number one, let's look at the down payment. You're going to have down payment costs. Down payments will vary from 0% for VA to 3% to 5 to 20%. Those are costs you want to think about on hand right away. Number two, you're going to have earnest money deposit costs. Earnest money deposit costs will depend on how your realtor writes the contract. They could vary between 1% of the purchase price to 3% of the purchase price, but you need to have that money on hand immediately if you're writing offers on houses. And home inspection fees. This is something else you want to pre-plan ahead of time for. Home inspection fees will vary anywhere from $400 to $1,000. That's another amount of cash you're going to have right on hand when you start this whole process. And appraisal fees. Appraisal fees is once you get the loan moving, those appraisal fees are also going to vary between $500 to $1,200. That's another out-of-pocket expense cost. And finally, closing costs. Closing costs typically vary between 2 to 3% of the purchase price of the home. Why is this? It's because since the pandemic, closing costs have vastly increased. So if you plan on between 2 and 3% of the purchase price of the house for closing costs, it's a very safe assumption. And then finally, because of the new court ruling, you have to now take into effect, you may have buyer broker agreement costs where you may have to pay your realtor anywhere from 1%, 2%, 3%, whatever you negotiate with them. That may be another out-of-pocket expense cost for you. Combined, these are all the things that if you take a worst case scenario, you may having cash come out of your pocket for all these different things that we just mentioned. Before you even jump into the pre-approval process, here's a couple things you can do to make it a little bit easier for you as a consumer. Number one, do a soft credit check. There's lots of areas you can do soft pulls on your credit to get a general idea. Number two, take a look at your overall income. Is your income stable? Is it declining? What's the length of time you've been at your employer? Especially if you're self-employed or 1099. Pull all this data together, it makes it easier. And number three, take a look at your debts. Do you have high interest credit cards? Do you have debts that are depreciating asset type debts? Just get a general idea of your overall finances and then start gathering your financial documents of tax returns, pay stubs, bank statements. Putting all these things together will make this whole process a lot easier for you as a preparation. So week one, we're going to start the pre-approval process, and this involves a couple different steps. Let's go over them. Number one, we're going to do what's called a loan application. Your loan application is done first because we need certain points of data to go into the next steps. Those data things are full name, social security, date of birth, where you've lived for the last 2 years, and where you've worked for the last 2 years. This enables us to now pull a credit report. Once we pull the credit report, it gives us a chance to look at your credit, look at what can be approved, look if there's different things on your credit report that are erroneous that we have to take care of. And it gives us an overall picture of your credit report, which greatly affects your loan. Next, we're going to ask you to pull together all your documents as far as pay stubs, bank statements, your last 2 years W-2s, your last 2 years tax returns. For self-employed borrowers, there will be additional steps, especially if you own different corporations. We may ask for K-1s, corporate tax returns, everything where your income comes from, we're going to want to take in to get a better picture of how we can give you the best loan with the best options. Then we're also going to take a look at bank statements, assets, any sort of accounts that you have, retirement accounts, compounding accounts that have maybe CDs in them, anything with physical assets and money, we're going to take a look at that. Then we're going to pull all that together and go to our next step, which is Ideally, what would you like to put down on the house? How much for the down payment? Next, that's going to link us to what's your ideal goals of buying the house? What's your ideal goal of your monthly payment? What is the ideal down payment for you? And overall, with you buying the house, what is the main goal of it? Is it a place to live? Is it to make the most equity? Is it a place that gives you the most appreciation? Is it a place that can rent the best? Is it a place with best school districts? All these things will be taken into account as we go through the week 1 of your pre-approval process. When that's all done, then we issue you the pre-approval letter that you use to go shopping. Now, a lot of realtors out there want us to give you the highest pre-approval letter we can so that you can make offers. I don't actually do that. I base the pre-approval letter per property. Why do I do that? Because you don't want to show all your cards when you're initially making offers. So I make your pre-approval letter personalized per each individual property and per each offer. That way you have the best strategic advantage to get the house without being the highest paid person on that house. Now that you're pre-approved, now that you've gone through all your goals, now that you know all the costs that are upfront, it's actually time to go do the fun stuff. You actually get to go shopping with your real estate agent. This is the time where it's really the most exciting because you already know your loan is in place. You already know what to expect for home costs. You already know what to expect for your EMD, what to expect for closing costs, and you're going to go do fun stuff. You're going to shop for homes with the realtor. Best advice I can tell you is this is a marathon, not a sprint. Take your time, move slow, be smart. So you've been out shopping with a realtor, you submitted your offer got accepted, and now you wonder, what's next? So this is like day 1 to day 3 of this first part of the process. So what happens is first, escrow is what's called, it's officially opened. Once escrow is officially open, the next thing you do as a buyer, you're going to submit what's called your earnest money deposit, which hopefully the lender went over with you and hopefully the realtor went over this with you, because sometimes some people tend to forget this. Remember, the earnest money deposit is typically 1% of the purchase price or whatever the realtor wrote in the contract. So you really need to pay attention to details because a lot of people don't, unfortunately. Then once you submit your earnest money deposit, the lender is going to go back to your loan file. They're going to put it back together again, and they're going to call you and say, hey, we need to update your loan file in order to get the whole process started. So we may ask from you updated pay stubs, updated bank statements, updated retirement accounts. We may ask for HR contacts, anything to update the file to keep it really perfect. Once we have that documentation from you, we're then going to disclose the loan to you. Disclosing the loan to you means you get an initial set of disclosure. They're not finals. They're initial estimates. These are all sent to you via DocuSign so that you can sign them so that the loan process can officially get started so that we're actually able to order the appraisal. Now we're on days 4 to 6. So things move kind of fast because now we're going to officially start processing your loan. Processing your loan means that we did get all the information back from you. We reanalyzed all the information to make sure it's perfect, and we officially start processing the loan. And since you've signed the initial disclosures, we're going to order the appraisal on really day 4. The other thing that's going to go on during this time frame is you want to order your home inspection. You want to order any other inspections that you need on the property in order to be ahead of the game so that things don't pop up later. The other thing that we're going to be doing as a lender, we're going to start looking into your title insurance, reading property profiles, double checking all the realtor's work to make sure that the property is what the property is under contract. Also during this time frame, you're going to want to order your home insurance. You really want to start around day 4, day 5, ordering your insurance because getting insurance in California now is very tough, and you want to be able to go through multiple quotes because sometimes the lowest quote's not the one you want, not the highest either. You want the one with the most reputable, good coverage. Once all this is going, we'll be moving on to our next steps, getting everything going. As I mentioned, in this 4 to 6 day window of the loan getting starting processing, the appraisal part's really important. The reason why we want to order the appraisal is because getting the appraisal done sooner is going to help you solve problems earlier rather than later. Because sometimes appraisals can come in low, which means below your purchase price. Sometimes they come in above. Sometimes they come back with bunch of necessary repairs that you have to do. And then this is an area where the realtor is going to negotiate for you for either seller's credits, repairs to be done, things to help solve a problem with appraisal issues are always good to do sooner rather than later. also during the same time frame, hopefully your realtor orders a home inspection and you really dive deep into a home inspection to look at everything from the HVAC to the plumbing to the roof to everything in the house to make sure that you're buying a sound investment. After that home inspection is done, there's a lot of other things that can possibly go wrong or go right. So let's dive into some of the areas where if things go wrong, where your realtor's looking to really earn their paycheck and representing you. So if things go wrong on the home inspection and there's multiple different types of repairs needed or multiple faults in the house, or there's things found, like for instance, the property was listed at 1,800 square feet, when in reality, the realtor, you find out it really only has 1,300 square feet because they made a mistake. There's a lot of things that can go on with the home inspection and the finer details of the property where your realtor really has to step up to the plate, start negotiating for you, and start helping you to either get all those concessions that you need, get the repairs made, even get price reductions. These back and forth negotiations are really where the realtor is going to earn money in representing you, which is why it's so crucial that you actually pick a good realtor so that they can help you win longer term with this house if there's inspection problems. Now we're into day 8 of our process. This is a really important day because not only is 8 like a lucky number, but 8 is also because your file will go into underwriting. When your file goes into underwriting, what that really means is all the documentation that we've collected as a lender for your income, your assets, your credit, your down payment, the sourcing of the funds, your length of employment, all these different things will now come into play with the guidelines under the loan that's been chosen that's best for your situation. So the underwriter will come in, look at the guidelines, that is all the rules of the loan that you chose that's best for your situation, that the lender helped you pick, and then compare it with all your other documentation to make sure everything fits perfectly into the box. The underwriting process can sometimes take 1 day, sometimes it can take 2 days depending on the complexity of the file. That's why it's very important that your lender gets your loan to an underwriter by day 8, because you always want to be ahead of all the timeframes that were put into your real estate contract to make sure that you're never in a bad negotiating point. Once that underwriter has fully reviewed your file and compared it to the guidelines versus all your documentation, what happens is the underwriter issues what's called a conditional loan approval. We could say full loan approval, but most of the time it's conditional because there's a few small conditions that are usually outstanding. Unless there was some sort of surprises that maybe you as the client withheld from the lender thinking they'll never find it, because we always do because there's money involved, there could be more conditions. Otherwise, the underwriter issues what's called a conditional approval. You'll have a couple loan conditions that the lender will reach out to you and say, hey, I need either updated this or an explanation for this, or why is there a missing area of your employment for this, or your insurance doesn't fully cover. There's small things that have to be adjusted with your conditional loan approval to then give it back to the underwriter so that you can go into full loan approval status. So now we're on to day 9. Your loan's been underwritten, your appraisals come back. So we have things that now meet the terms of the loan to be able to allow us to issue what's called a closing disclosure. Your closing disclosure is one of the official documents that breaks down all of the cost of the loan in an exact format, from all the lender costs, all of title, all of escrow, all of insurance, all of your prepaids, all the miscellaneous fees that go into a loan, which you will see they're very long. That's why it's very important that day 1, your lender goes over all the costs of the loan with you. And when your initial disclosures first go out, you want to make them as accurate as possible, because when we come to the closing disclosure, it's going to be issued to you as a consumer to DocuSign. And once you review it and sign it, there's a mandatory 3-day waiting period upon which any sort of corrections can be made onto that closing disclosure. If there was mistakes, to either reduce cost, because if costs were increased once the closing disclosure is issued, we cannot increase them. That's done for your protection, because a long time ago, back in 2005 to 2008, lenders used to do bait and switches that increase everyone's cost. And this closing disclosure was designed to allow you to have more protection as a consumer, as once the closing disclosure is issued, nobody can increase their fees. And there's a 3-day mandatory waiting period for that to go before you're able to sign loan docs. Now we're at day 10. This is an exciting day. Realtors are excited. Everyone's kind of like, yay. Why? Because it's called clear to close day. Clear to close day means all of your conditions were officially turned back into the underwriter. They were all signed off, and now your loan is cleared to close, which means we're now able to order your loan documents. You also got to remember, we already issued your closing disclosure prior on day 9 with the 3-day waiting period. Now that you're on day 10 and we clear to close your loan, we're ahead of schedule. We're now getting ready to order loan docs and move you on to times that are a little bit more exciting than these first days of the process that are usually kind of stressful and seem to move very fast. Now we're on to day 12. Your loan was cleared to close. We ordered your loan docs, and now everything is going to go into play. We're going to contact you to say, hey, get ready. We're going to be signing loan docs shortly. We alert title, we alert escrow to let them know, expect our loan docs will be coming. This is also a time when the lender will be go over with you. Let's get ready to send in final closing funds, because once your loan docs are ordered, it usually takes 1 to 2 days to get them out. And this still puts us in our time frame window to being able to complete your transaction ahead of time according to your contract. So it is important that you're available. It is important that you don't go on vacation. It is important during this time that you don't open any new credit cards, close any new credit cards, buy a new car, spend any of your money, because now we're at the final shot of your loan docs being ordered. We want to keep everything perfect. And at the same time, any other questions, concerns you have as we're getting closer to the end, you really want to ask now. Now we're at day 13. We ordered the loan docs day 12. Only took 1 day. Very good. Loan docs show up at escrow. Escrow now has to do what's called prepping the docs. As you will notice, some escrow companies will charge you a ridiculous amount of fees to print loan docs. They will also charge you more fees to organize the loan docs, when in reality, it's just pressing a button. But besides all that, once your loan docs are at escrow, escrow is going to reach out and contact you. They're going to set up a notary to sign the loan docs with you. When you sign the final loan docs, you do need a photo ID. We will take your thumbprint. A notary will endorse everything. This process typically takes 45 minutes to an hour. And this pretty much means you're almost home free once you've signed those loan docs. You do want to go through it slow, take your time. If you need to call the lender, call and ask questions. If you want the lender present with you, just request that as well. That can easily happen. You want to make sure you're very comfortable and take your time when you're signing your final loan docs, because we're literally 1 day away from being done. Day 14, you signed the loan docs yesterday. The loan docs are now returned back to the lender. The lender reviews all the loan docs for any possible mistakes, because there were humans involved in this transaction, which means there could easily be mistakes. So the loan docs come back to the lender. We review everyone's work once again. We review the realtor's contract. We review your loan. We review the loan doc signing. We review all of title and escrow's paperwork, because we're getting ready to issue all the money. And once we send the wire of the money over to escrow and it records inside of title, the transaction is done. So when the loan docs come back to us, we do review them. We make sure everything fits the guidelines once again. We do also verify your employment on this day as well. This is key to note. On the day we're funding the loan, the lender always reaches out to make sure you're still employed and still have your job. So do not lose your job the day we're going to fund the loan. Super important. This is the very end of the transaction, the most exciting part. Typically, loans are funded in the morning, and then they record in the afternoon. Usually at 3 or 6 are the recording times. Once it records, that means the home is officially yours. The realtor can give you the keys right after that, and you are done. No more paperwork, no more things to do. So the loan funded, the loan closed, it recorded yesterday. We're 1 day past. This is called post-closing. What usually happens at post-closing? Well, we want to make sure, A, you kept a copy of the docs because you want to put them in a safe spot. B, we want to make sure that you're going to go on and set up your new mortgage payments, whether it's going to be on your cell phone, an app, an auto deduct. All this is going to come into play, because right now, after the closing has happened, there's a lull period of about 2 to 4 weeks where you don't really see anything. But this is the most crucial time for you to make sure that you have your documents ordered. You're going to get everything set up for your loan in advance so you don't miss a payment. And then basically you sit back and enjoy the house, because owning a home is one of the best investments you can ever make. This was a fast escrow. This was basically a 14-day close, which most lenders take 21 to 30 days to close a loan. So this moved very fast. Each loan is going to be different. Each time frame is going to be different, because all this comes into play when you're buying a house and what you want to negotiate to get a better deal in order for you to get your offer accepted. I hope you enjoyed this video. If you got more questions, concerns, DM me, text me, reach out to me, and thanks for watching my videos. Appreciate it.